Hi, this is first day of the month, July 1st, and we'll start with BTC as usual, starting with 4 hours and see what it's trying to do. Focusing on the recent price action. Um, of course, this was amazing move, consolidation, and then another leg up. And what you see is a longer consolidation. This is not a surprise when you have a big move like this, and then it could go for longer consolidation. In fact, yesterday's move, this one was very close to new breakout, in my opinion. But then we heard the news about ETF rejection, and some algo reacted to this one. When I say algo, means predefined programs which do trading. You can say bots. So those bots would have, you know, conditions, and they would just act based on conditions. So if there was some good news, they would pump some money, or some kind of fundamental change they quantify, then they would pump money, otherwise they pull money. So usually, and we would not know. And so definitely this was the reaction when there was news on BlackRock's ETF rejection. So, but as you could see, the reaction was sharp, very like, and it was like quick drop. However, this was for short term, only for few minutes, in fact. In matter of hours, it bounced. It didn't break this one. So if you look at the big picture, the consolidation range um, hasn't been broken. So that's why I was driving and I just saw that, and when I saw where it stopped, I didn't bother to set any kind of alert or update anyone because it was not harmful. It was sharp and sudden, and especially when everybody was expecting a breakout on the upside from here, and when you see this one, naturally emotion kick in, and people get worried and unusual typical behavior, right? So that what happens. But when you look at how deep it has gone, and from where it reacted, and how fast it reacted, and so on, then you realize that it's nothing. When I say nothing, means it's not something that could jeopardize this move, overall move or recovery attempt. So, and I always keep on saying recovery attempt because we know that it has to break certain levels. So uh, I've been consistently saying that it's not something about, but it has to, it has, I mean, there are levels where absolute top is, as I said, realized retrospectively once the retracement um, for that particular wave. Similarly, when you see 16K kind of a level, you cannot say that this is the bottom. You can say from there it could bounce and then starts going up and so on. So basically, this phase, whole entire phase that we see is all the recovery phase, and that has been very positive without any doubt. So BTC, this is consolidating on a lower time frame. We can quickly look at 1 day. We are not going to see anything different, but little different view where we could also keep in mind the prior pattern, which was like descending correction, like correction. And in a broader sense, this is consolidation, as I explained in one of the calls. That these are different types of consolidation where it involves some correction. You see, sometimes consolidation is not necessarily horizontal move. Sometimes consolidation could be ascending, horizontal, or sometimes with some angle like this. So these are like structurally, when you see this one, a leg up, consolidation with correction, leg up, consolidation with correction, a leg up in process. So this is how it moves. And every time the pattern is going to be different. Okay, every time the structure is going to be different because it's not, it's an outcome of random actions, right? We don't know the future buyers and sellers. Nobody knows. Not only that, we don't know the repercussion of their action, right? Outcome of their action. So it is always unknown. So the structure is going to be very different. But what happens, somehow it ends up in a pattern which TA could recognize. You know, TA, the technical methods is able to recognize, and that's what. So it's a continuous process. That's what I'm trying to say. It's not that you nailed this one. Okay, see, if I nail this one, fine, but now when it is here, I have to I mean, I have to work on the current pattern and whatever is happening. So it's a continuous process. Sometimes people say this is going to happen. Is what they do is, of course, they have their bias and then they take stand, and nothing wrong about it. I would say they are wrong. They are wrong only when they talk about extreme. If they give a path, let's say if I give a path, then it's all right because the path doesn't have exact, you know, price levels. A path could be, and then that path has to be corrected as well, right? It's every week when you meet, you have to have review of those that path and then do the fine adjustment. So yeah, as far as this recovery attempt, as you could see, this is fantastic. So this kind of consolidation with some kind of volatility is part of the game. So there are always going to be positive event, negative event, and we're going to see some sudden movement because of that. Only thing is sometimes we are always biased towards the upside move. Nobody cares that look about this move, and sometimes they focus too much on a short term and they miss the big picture, right? So that's the common mistake people do. I'm not talking about this group. I think this group is mature enough in my point of view because probably I have hammered enough, and also they also learn from their lesson together. And so I'm sure everybody is now on this group is mature enough to understand what is really happening and develop some kind of resilience. So they would not bother about intraday movement like this, and they know that big picture is different than what we see on the day, right? On an intraday basis. So they have, I'm sure now everybody has developed that kind of understanding, right? So there is nothing more to add, to be honest, because it's consolidating nicely positive. The yesterday's event is gone. It is no longer valid. The effect it would be there because the money that was pulled out, not necessarily that money will come immediately. It could come, but the effect would be there, like that, like ripples. When there is impact, there are always ripple in the water when you throw something. So that kind of ripple effect is always realized, for depends on how severe the impact is and so on. But not necessarily it would derail the trend. So that's what I mean. Let's look at bigger picture. So this is our bitstamp setup, and as you could see, it has touched the upper range, and in this week also it tried to touch. So this path that I have is still valid, as you could see, right? And once it breaks above, as I mentioned, I'm going to remove this one, which goes down. For this, it has to close about this, then I can remove this. I have to keep this. It's not about what I believe in. It's not about how good the recovery trend is. It's about the the levels that TA technical analysis offers us, and we have to respect those levels, and we cannot, if I remove, then I would be adding my bias, so I cannot. So the probability of this path is very low, even just 10% at this moment. When it was here, the probability was of downside move was 40%. And as I said, this is how I see that uh, it's I always say this, it's not a black and white picture. It's not black and white picture. It's always gray. There are always gray shades in between. So if the if this is the bright future and this is the like doomsday, the transition happen gradually, and that's why the longer term time frame is important. People try to judge on a 1 day time frame, which doesn't make any sense in crypto. Even in stock market, in fact, even weekly time frame is not good enough, to be honest, in my experience. You have to really look at the trend at monthly and 3 months. Then only in stock market you will figure out. Anyone who is tracking on weekly probably to get some early idea. In crypto, weekly is good enough, and it is simply because of the pace. And you will learn that with experience. So even in crypto, 1 day is not going to tell you any trend. No way. 1 day is just garbage. If somebody is trying to figure out trend. Yeah, of course, if somebody wants to trade on intraday, then it matters. But those who focus on swing trading, those who focus on a longer term trend-based trading, they don't care about 1 day time frame at all. Okay. So I would remove, I cannot remove this, but the probability is 10%. The 90% probability is on upside. So it's a game of probability. There's no certainty because nobody knows the future. Certainty comes only if you know the future, right? And and there are theories that even if you know the future, actually you change, because if you think about it, if you know the future and you change something in present, and the present, I mean the future is born out of present. So in my point of view, in my opinion, if you there's a butterfly effect, right? If you have seen the sci-fi movies and time traveling and all those. So I believe that even if you know the future and if you try to do something different, then you end up changing the future. Anyways, the point is, uh, the probability point of view, mm, this trend is strong. Nothing wrong about it. In fact, I'm just waiting when it will break above and settle above 33, 34K. Then it would be wonderful, right? There can be some retest and then move on the upside potentially. Often we see that when there is a breakout, then there is some kind of retest. So we have to be mentally ready with all this. Remember all the times that even if it breaks out, let's say next week, before our weekly call, and if it re-enters, you don't have to worry about that. Okay, that is totally allowed. Okay, if you look at this one, this was also retest in a way. Actually, if you look at this one's also retest. If you look at this low with respect to this rejection, if you look at this low with respect to this rejection, you get a clue that this is kind of a retest. So if it breaks above and test this top, not necessarily it will follow the highs. People sometimes go too much in the micro level. It is not about exact dollar number. It is about the pattern. It is about the symmetry. It's about the trend. So and sometimes people, I mean traders, experienced traders know that it's never about exact dollar number. It's always about zone, specific range and so on. And sometimes there can be false breakout on upside or downside, and traders are fast enough to realize that there is a false breakout and take care of the risk. It happens sometimes, right? So it's all about how you manage the risk, how you plan your trade. So trader requires some kind of involved, especially when they put money. I'm not saying every day. So if you're a swing trader, even if you're a swing trader, even if you're a long-term investor, I would say it doesn't matter. For intraday, for long-term, I believe that the amount of attention is required is the same. despite of any, I mean, irrespective of type of traders you are. For an example, let's say hypothetically, if the 66K was the top, right, for BTC. Now, if you're a long-term investor and you end up, putting money somewhere here, thinking that this is a breakout and going up naturally, and if it starts retracing, I believe even if you are long-term, I believe there has to be some kind of protection. Adding position at 66K and keeping all the way to 15K, it doesn't make sense in my book. It doesn't make sense. So that's why I say, even if you are long term or short term, it doesn't matter. Whenever new money is put in, I would say there has to be some kind of protection, because I personally think about my principal amount. Okay, if I'm in profit. So for an example, if I had entered in a previous cycle, right? Previous cycle, not this bull run, but somewhere here. And if I can be lazy, if I have entered, let's say somewhere here, 8,000, 9,000, then I can, and if it retraces all the way to 15K, and I believe that the trend is not broken, which is true. From this trend is not broken. This is a counter trend with respect to this trend. The trend is not broken technically, right? So yeah, 10K would have put this in trouble, a big trouble. That didn't happen, luckily, which is good. But to me, if you look at, this is like 11 years of trend where all the bear cycle we call are nothing but counter trends. This is the trend. As part of this is a counter trend, very simple. And this is just one attempt, and this is a retest. Similarly, when you look at this trend, I mean, you can divide the cycles, of course. But if you look at the big picture, let's say on monthly, this is single trend. This is single trend where you can dissect in cycles. There's one more cycle which is not on Bitstamp. Yeah, it's on BLX. You could see, yeah, this is not on Bitstamp. So you can say this is the first cycle, this is second cycle, right? This is third cycle, and this is the fourth cycle. And each of this cycle had counter trend. This was shorter, sharper. This was, it's, you see, it's not deep enough with respect to this one. This was a big one, and this was also not big enough. The problem is people end up entering somewhere near top somehow, and that's why they feel the heat. That's what I'm saying. If someone, that's also fine sometimes, because you don't know what is really the top unless you have platform like us, right? A good TA and good platform where you would know that this is a potential top. Otherwise, it's not easy. So if someone enters, my from point is, someone enters near top, there has to be some protection. But if somebody had entered on a prior cycle, then that person would have higher tolerance. By the way, that's true for only Bitcoin, or maybe for Ethereum. Point is, because they have proven, one has to understand that how many cycles different coins have seen. Okay, that question has to be asked. Of course, Bitcoin is the oldest. So let's say Bitcoin has seen 4 cycles, as I counted, right? 1, 2, 3, and 4. Right. But some coins have seen 3 cycles, like Ethereum or Litecoin, or some older ones. And then what you have to see, and that how many of them, some coins are still very old, like you can find, let's say, Digicoin or some other coin, very old coins, waves, not waves, my bad. How can I forget? I forgot. Some of the old coins I used to track, they're old, but point is, they haven't seen new all-time high. So some coins, let's say, started in 2017, they had amazing bull run from 18. But with respect to this cycle, so with respect to Bitcoin's 4th cycle, which is this one, the recent one, those, some of those coins did not make new all-time high, and that's the reality, right? So I'm digressing a bit. I'll come back to the main topic, but my point is, irrespective of different, first of all, understanding of the cycle is important. Understanding of the risk management is important, and we cannot assume that because Bitcoin has done it, the altcoin that I'm holding will also do. That was my point. That's why I brought up that point. That's the story. Because I cannot assume it with that altcoin, because the reality says that if you look at the history, if you can go to coin market cap, and there are snapshots based on year. And when you look at top 20, they have snapshot by year. So you can study that top 50 coins, for an example, and then you would see what happened to those top 50 coins, and you will get some idea, right? So that's so important that we can talk about Bitcoin, Ethereum, but we cannot talk about even Litecoin could make new all-time high, right? Even it was like all good good development within the project and so on. So that's the reality. So as far as long-term cycle is concerned, why I'm saying this, because some people say that holding blindly, ultimately my coin will, you know, go about my entry point. That's this is the point I'm trying to address. That I cannot think personally if I'm holding alt. It's not about being pessimistic. It's about proving the point. How can I assume? I cannot assume, because it's a race. Let me tell you, even from fundamental point of view, you forget about crypto. Look at the traditional market, the mainstream market. Look at the leaders in different fields, whether it's in a manufacturing sector, let's say car makers, phone makers, you name it. The every few decades there are some new players or new, um, top companies, different. So you look at what Tesla has done. It's growing so fast, and look at its market share, it's rising. And so if other would not follow Tesla, what will happen? Just imagine. Like, similarly, different sectors, you see the changes in IT companies and some other sectors. Of course, there are some sectors which are like exceptional, where the cost of building, like for example, one sector like aircraft manufacturing, Airbus and Boeing, these are the only two companies in the world. But we cannot name any other industry where, so these are the top two basically, but usually you will find top five. But so top five usually share 80% of the market share. And if you look at the industry, so usually that's the case. So but they also change over time. That's my point. So in it's a nature. So when you look at altcoin, and if there are thousands of coin, do you really think that whatever is the top one will remain? Not necessarily, and we have to really track them. So that's my point. So even that is true for Bitcoin. Bitcoin is no exception. Bitcoin is has the credit goes to Bitcoin because it has proven for last 4 cycles. So without any doubt, it's number one coin. No doubt about it. But my point of view, we cannot assume even for Bitcoin and apply risk management, in my point of view, as much as possible, even in Bitcoin, because you never know. There can be another coin, there can be some kind of a legal matter which can come up, and who knows, some other network, some other project or platform may turn out to be the leader, right? What happened to Nokia? Um, we know, for example, or any other industry for that reason, right? So there are always new players, and you never know. Like AT&T, for example, was a leader. What happens? They're not even making phones these days, and so on. So you never know that this, because this is a race. I believe this is a race, and in a longer term, Philips, for example, electronics. Look at the Philips. Look at GE. So many examples you will find. Look at IBM. So world leaders. look where they are. So I'm not saying you have to assume again. We don't have to assume. What I'm trying to say is we have to keep an eye. We cannot just assume. That's what I'm saying. So don't, so both ways. If Bitcoin is amazing, which is the case, don't assume that it'll be amazing forever. And any coin that any alt that you're holding, let's say, and it has done amazing job in past, don't assume that it will do it again, because we have examples where there's no new all-time high. So I'm taking two different cases mm, to make a point that no matter what you buy, you cannot just assume that it will continue to do well. That's my point. We have, because always there are dynamics which change, and we have to keep an eye. We have to look at the political change, because there are a lot of political like entities and decisions, not necessarily tech related. Tech is amazing, but the political reason, for political reason, they might want to curb control, and it is possible, right? And sometimes social aspect. For example, AI. I'm in a group that AI should be controlled. Otherwise, there could be major social impact. If in a major impact, from a job point of view, from social change point, it's going to be rapid, and joblessness would be high if the AI is uncontrolled. So technology is amazing. We love technology, but I mean, there are always some factors, as I said, sometimes political factors, sometimes social factor, like AI, and sometimes competition, right? So there are always some factors where existing technology or the leader of the technology or project may lose that status or rank. So we have to be cognizant about the potential change. Okay, so let's come back. So risk management is very important. Understanding trend is important, and that's where I started saying that whether it's a long-term investor, short-term investor, doesn't matter. Risk management applies when money is added. Okay, so I think weekly, this is all right. Monthly, we can have a quick look, and um, monthly is on edge. And this big picture, I'm not see. There is symmetry. I cannot remove this. If this starts going down from here, there can be a big head and shoulder which could create a big problem, and I'm not going to remove this. I'm not saying this is going to happen, but I'm not going to remove it now. I want it to close above this and remain above this, remember. Then only, so if it closes, then I'm going to remove this, of course, because it doesn't make sense. Then we are going to see potentially the fifth cycle. And I have my point of view on the fifth cycle, how it may pan out, technically looking at the wave structure and all. So you will get that information for sure. But I'm not someone who will call out 10K or 6K, and I'm not someone who will call out 100K, 200K or higher. It doesn't make sense. It doesn't make sense. Yeah, it will make you happy or sad. Depends on what side you are in. But as far as money making is concerned, it doesn't matter. And yeah, so in summary, Bitcoin, I would say it's strong and weekly, but it has to close about this, and that's something we would wait and watch. Let's look at Bitcoin dominance. So as per my calculation, 51.8, roughly speaking, 52 is the resistance. Now, resistance is where it reacts. As you know, resistance is not rejection. Remember, I have to keep on reminding sometimes. The resistance is where it reacts, and reaction could be outright rejection. It could be consolidation, and it could be a retest of this, and so on. So at this moment, when it is rejected here, let's say, and let's say it corrects, then of course that also means that money is entered into some other coin naturally. So, and we see that, I mean, we can see that altcoins are pumping. Of course, not all the alts are going to pump. We have to be selective in that as well, right? But overall, it looks like the eventually the money is entering into altcoin, which was not the case for last 10 weeks or so. They corrected deeply. So, and some of the coins made new low, unfortunately, right? So that ties up my previous point that we talked about the new high, uh, right? New all-time high with the new cycle. But we have cases in altcoin where they made new low, right? December is the low for the Bitcoin and all the coins. But some of the altcoin I have seen, they made new low recently. Some coins have retested the December low, and but and it is possible, very well possible, that some of those coins will never even reach to January high or February, whatever, March high. It is possible. So that's why we cannot just assume that because Bitcoin is going up, you know, I I tell those who follow Bitcoin dominance, they think that there's alt cycle. The alt cycle, true, but selectively, not necessarily for alt. I mean, there's 7,000 plus coins, and we cannot assume that alt cycle begins because the Bitcoin dominance is stable or reducing. We cannot say that all the coins will go up. We have to be selective for sure. Right. So it's always good idea to have a reference to see, just to get idea. I mean, I don't expect anyone who is say, okay, now I'm in Bitcoin. Bitcoin has hit dominance, has hit the resistance. Okay, let me sell my Bitcoin and let me buy altcoin because alt season has begun. And I think that's a really bad idea. That's not how it works. So this is just a reference. Okay, so let's look at the DXY as well, as we always track on a weekly. So DXY is actually not dead. Okay, I'm not saying it is strong, but it's not dead either because this is still consolidating, and the consolidation hasn't over. So this is the low retest, and this is it actually last week, especially Friday, it was dumped. Otherwise, this was really going up and could have created some pressure. I'm sure if it would have approached 105 or 6. But good thing that I mean, good to see it corrected on Friday. So we have to keep an eye on this thing, right? Because this is relevant. This is still relevant. And from the trend point of view, if somebody is saying that the DXY trend is broken, you can argue. Okay, the trend, this is the trend. This is a counter trend. Remember, this is very similar to December low of Bitcoin. Okay, let me tell you, if you have to compare. So there is no way, technical point of view, one can say DXY has broken the trend. Okay, yes, if it fails to recover from here and makes new low, then we can say it has now it is going down. And that's why you would see that there is no contradiction in our analysis. I'm saying the DXY, this move actually create the counter trend on from Bitcoin, right? And then this move has actually created the recovery trend. And this consolidation is where you have seen the hiccups in Bitcoin. And so if it goes down, of course, it is going to help Bitcoin because that was the case in past. So probability point of view, not Of course, there is no equation, inverse equation we can apply, but probability point of view. But if it, so this is just a counter trend. So if it goes above and goes up, breaks above 106, we have to be very careful, because you never know what might happen. I'm not trying to threaten anyone or scare anyone, because it's about awareness point of view. Remember, the core inflation is still sticky, and Fed is planning to plan a rate hike. There are good factors that the inflation is trending down, begin, but we have to see if it continues. And the Fed is also going to see, but the core inflation, that's what matters, and it's not moving much on the downside. So if the Fed goes for another rate hike, that could pump the XY and potentially put PTC under pressure. And we'll see when it happens. Again, don't assume it. I talk about scenarios, but some people think that this in that what they tend to do. I mean, it's a human psychology. When we talk about scenario, they tend to select scenarios, and they actually accept those scenarios as reality. The way I see is, you can have scenarios in your mind, but create a compartment. Okay, put walls around scenarios, and allow only those scenarios, or open the doors for only those scenarios whose probability is likely. So when I talk about Fed's possible rate hike, consider that as a scenario, but lock that in a room. You refer that, you watch that, but don't let the door open within yourself. Okay, keep it in your memory, but don't let it influence. Don't think that that's a reality. So this is important. You have to think as an investor. There are always going to be events which are positive and negative, and potentially beneficial or potentially risky. You cannot be ignorant of those. What you have to do is, you have to allocate space within you, but lock themselves and allow only probable ones to come out. If you can do it, because that's the way. This is how professionals do. Because sometimes some people have bias towards some one direction. So, oh, yeah, Fed is going to do it, and they say, oh, yeah, it hasn't happened. Okay, so the probability of that is not realized. I mean, not high enough at this moment. It's just a scenario. They may not do it, right? So, but awareness is important. You see, the key thing is the factors that you think. I mean, imagine an equation like A plus B minus C minus D equals something. Now there are four parameters or variables, A, B, C, D, and there is equation something like A plus B minus C minus D. Now, if A plus B have the same weight as C and D, then the net effect is zero. And if A and B has higher effect, then it will go in a positive side. If C and D has a negative effect, then it will go on the negative side. So think that in this case, I'm talking about four variables, A plus B minus C minus D. But think that equation could be more complicated in reality, and it is the case. And there are multiple variables, not just four A, B, C, D, but there are multiple factors. So in an equation, their weightages could be different, and there can be plus minus, or sometimes multiply, right, factors. So you don't know, we don't know what we are attempting. When we talk about scenarios, we try to figure out variables that could affect the price, right? So DXY is a variable, Fed's decision is a big variable, right? Any ETF related, let's say, change event is also variable, whether it's a small or big, it's a variable. So we have to think about all the variables which we could find, okay, which are relevant, and then try to see how they could impact eventually. So this is how but that's more unfortunately, we cannot find the factors. We cannot find the net effect. The price is the right way. So that's a fundamental analysis, a macro analysis people do. So I would not go into answer of that formula, because that answer is price. Very important point. Okay, you can refer this video again. There you can find the variables, but the net effect you cannot find. But you don't have to find the net effect, because you can find ABCD, but you will not find whether that has a polarity of minus or plus, or it has a multiplication factor. There is no way to find it in reality. Okay. But what we will do is we do two things. The FA, fundamental analysis, try to find the equation, whether A plus B minus C or D, or A plus B multiply C multiply D, whatever. If they try to find out that kind of equation. We don't do that. TA do not do that. What TA would do is only find out ABCD, just to keep an eye and look for the chart for those charts, ABCD chart. I mean, chart of ABCD. So if the XY is, let's say, variable A, then I will look at the chart of the XY. I would look at the chart of variable B, right? Bond yields, for example, or something else. So TA would look for the chart for variables A, B, C, D. They will not try to find out the equation, because the net effect, actually, you don't have to find out the equation. What you get as an output is the price. So the price is the result of variables. So the TA focus on the outcome. This is the fundamental difference between FA and TA. Okay, that FA tries to find out the equation, of course, variables and equation, and then try to find out the net effect, positive or negative. And TA says, forget about all those. I'm going to focus only the price, net effect. Let it be what, I don't care about the equation. I would look for the positive, the polarity. If it is positive, and I'll see how the trend affects with that, and then I'll track the trend and then decide. So that's the methodology that TA follows. Very different approach, but I'm trying to explain how two different schools of thoughts work. And what we do is kind of hybrid, where we don't try to find out equation, but what we try to find out that the variables A, B, C, D, for example, and we go to the chart of A, B, C, D, and then try to do the same, that how that chart looks. If the A's chart is positive, which is, let's say, pro Bitcoin, then we can say the Bitcoin is likely to do well. If chart of B, which is also pro to Bitcoin, if the B factor is also pro to Bitcoin and doing well, then we can say the Bitcoin could also do well, and so on. That's the methodology. Okay, I hope you are not lost, but yeah, probably some of you might be interested in. This is how I do. I'm not saying everybody does, by the way, to be honest, and to clarify, this is my methodology. This is how I see things. So I focus on macroeconomic factors, but from variables point of view. And I would look into those charts, like I'm looking at DXY. I would look into what the bond yields are doing and try to figure out what bond market is trying. Then I would look at stock index similarly, and then try to see what stock index is trying to do, and so on. Right. Not only that, I sometimes go into Forex, because there are in DXY, there are 6 currencies, and I have those 6 currency. That's Euro, JPY, GBP, CAD, and this is Swedish, and then this is franc, Swiss franc, right? These are the 6 currencies. DXY is made of 6 currencies. Not only that, they have weightages. So Euro has the highest weightage, around 60%, and other have. So when I look at DXY, I sometimes go and check the USD Euro, because you will see that the DXY look very much the same as Euro, USD Euro. You see DXY and very similar. Why? Because it has the highest weightage up to 65, I believe, or 66 maybe, but above 60 for sure, right? So that's why you see that euro chart, I mean USD euro chart, is the key, is the driver. Of course, we cannot ignore other four, but I look at other four and see, okay, look at this, JPY is so weak. But good that JPY has the do not have high weightage. Otherwise, DXY would have, swing towards USD so much. And then look at the GBP. So GBP is stronger than USD in recent time because it made new low. You see, so JPY is bad. I mean, going down with respect to USD, right? But GBP is, so there is some kind of a balancing act here. Then we'll look at the CAD. The CAD is also pretty strong recently. It made new low, but and then we'll look at the Swedish, which is kind of neutral. Then Swiss franc is pretty strong. Look at the USD is down so much. So Swiss franc is helping, bringing down whatever percentage, 5%, 10%, whatever. So, but it is helping out DXY to be contained in a way, right? So I go into, so DXY is important, but then I look at DXY bucket as well, the basket, and look at individual 6 coin as well as a TA. So this is my method. Okay, so if I see the euro is weakening, that means DXY is likely to weaken, and then I would figure out that the Bitcoin could also weak and could get some impact. I'm not saying full impact or direct impact or immediate impact, but some kind of impact, So this is how TA, especially I cannot speak behalf of other TA. This is how I look at it. So A, B, C, D are variables, A being DXY. So the A also could be, factored by something like A prime, A double prime, something like that, like 6 variables within that. So that there is endless thing. And then you can even dig more that, okay, why euro is down. So you can look at who is the most powerful in Eurozone. So you can look at Germany and France are the two drivers. Other are small players. So if the euro has to be stronger, then who has to be stronger? Then these big players. Then you look into German's economy, you look at, and then France's economy. I'm saying you can go further deeper, and then further find out that euro is mainly driven by these two countries. Other are not important after Brexit, right? Otherwise, UK was part of it, right? And of course, Swiss franc is there, but it's a different country. But there are some kind of exchanges happen. But point is you can go even further down and look at those economies. So if Germans and French do well, then euro will do better. And if the euro would do good, then the XY would go down. If the XY could not go down, BTC would get help. You see, this is how. But looking at the chart only, by the way, okay, not the fundamentals, like only charts. But the approach is same. The FA and TA would have the approach same, means what all to be looked in. Sorry, I should not say approach is the same. What I said, what to look in is the same. The factors are the same, but how they look, the process is different. So I hope you find this is helpful. I went into total different direction, but this is what I do on a weekly call, right? I end up talking about something. So I hope you find useful. So that's about Bitcoin and related stuff. So we can look at bond yields. Look at that, it's bouncing. And why? Because the Fed could go for rate hike. That's why it's bouncing. So right now it's very funny situation, actually tricky situation, I would say, where the bond market and the stock market are thinking north and south. Usually they're opposite, right? When people go for the fixed income, this is called fixed income. Bonds are fixed income because you get the fixed interest. People go for the fixed interest, whether long term, short term, depends on the risk. The people go for long term fixed income if they want stable income because the interest rates are fixed. That's why these are fixed uh, these are fixed interest instruments, right? So people would go for, and the yields are going up, as the new bonds would have more, would have higher yields because they have to attract, because otherwise people would not give their money. All right. The bonds are debt instruments, so basically people give cash and they get interest. So the issuer need to um, offer debt instrument like bonds with a higher rates for 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 you to give money to them, right? So what the government want money. So government has two sources. One, taxes. Some government have three sources. Okay. Talk about the US and most of the European countries. There are only two sources. One is tax and another is borrowed money. They get, so tax money is easy. Whatever tax they get, they spend on their salary and other government initiatives. And second, they, when they sell the bond, the sovereign bond, the the treasury for the US, and similarly the gilt is in UK. That could be different names, but basically those are debt instruments, fixed income. So what they do is the government raise money from the people or country, some other country, and that's how they get money back, and they have to pay interest, right? But if the bonds do not have high yields, means high interest rates, people will not buy, and that's why the yields will go up. And why the bond price will go down? Because the lower interest bonds are sold in the market, and that's why when it is sold, the bond itself go down. The yields, you can read more about. I'm not intending to teach bond market, but a little bit of some basic knowledge, right? So the yields are not the bonds. Remember, the bonds and yields are opposite. Bonds are, the bond price goes down, yields go up. They are opposite. You see the chart of yield. Remember, this is not bond price. This is yield price. The interest. And when the yields go up, the bond go down. Okay. Anyways, the point is, when the yields are higher and higher, as you could see, then the dilemma is where you would invest. And the common theory is the bonds are invested when there is insecurity. Okay. When there is insecure future in terms of returns. Otherwise, they would put in stocks. Right. So, but at this moment, my earlier point was the bond market thinks that yields will continue to go down. That's why, because the Fed is not stopped pausing, they have skipped, not paused, and so on. And the stock market is also going up, thinking that Fed will pause. So both the markets are in opposite direction, which is not the case usually. Very interesting, jump, very interesting ways. I mean, if you are very interested, you can study all this. Very interesting. If you go beyond crypto, because the big picture is very important, right? Crypto is very tiny in terms of money, share in a big scheme. So these factors are important. It's a very interesting thing is going on. The bond market and stock market are going in tangent. In fact, opposite direction. Okay. So I would stop here on Bitcoin and take any question.